Hey, Ron, I just wanted to thank you for joining me today and talking about some of your tax planning strategies that you have. And I was hoping that you can kind of explain to my clients what we do. So I have a few questions I wanted to ask you regarding that.
Oh,
Number one, so how can my business owner clients pay less in taxes?
well, let me go ahead and show you real quick kind of how taxes and accounting kind of get all lumped together. And those are really two separate components. So a lot of times when people say they have a tax team, what they really have is an accounting team that happens to file their taxes. So it kind of goes like from level of sophistication and expense, hourly expense, from the top to the bottom to the most expensive person at the bottom, and certainly the most complex answers. So bookkeeper, literally, you can watch a couple of YouTube videos and call yourself a bookkeeper. There's no education training experience for that one. That's good for like day-to-day transactions and that kind of stuff. Also, from an accountant standpoint, they usually have a 4-year degree. They've gotten into monthly balance sheets, cash flow statements, income statements, and you can get a higher level of bookkeeping from that person. And then a CPA or an EA, certified public accountant, or EA is enrolled agent. So they're very similar, unless you ask one of them. They think they're very, very different. But there's a couple things a CPA can do that an EA can't do. Other than that, most of it is the same. The EA gets their designation from the IRS. And CPA is just a private designation that someone trademarked 30 years ago, and it's kind of become an industry standard. But all of those people are trying to get you to tax preparation, which we all have to do every year. And all of those jobs are very reactive and very, very tactical, step-by-step, methodical type processes. By reactive, I mean it's the end of the month, end of the quarter, end of the year. They're looking backwards and saying, what business activities did Ron and Dan choose to do? Identify that activity, put it in the right category, put it on the right form, and then file that form timely. So it's all after the fact type stuff, which is fine and necessary. But where we really see being able to move the needle, the fastest growing companies, the most profitable companies, usually have someone above that line, that big line between 4 and 5, and also someone below the line. So the jobs below the line are controller, who's all about reducing expenses, tax resolution, which is if you're behind a couple years and need to negotiate with the IRS because you can't pay your bill, that's the tax resolution expert. Tax planner and is all about reducing the taxes. And CFO is a little bit of an overlap with controller. Controller is all about reducing expenses. The CFO supervises all accounting procedures, is concerned about reducing expenses, but is also tasked with how to grow the company as well, whereas a controller is not focused on growth at all. And CFO is Chief Financial Officer. And then tax attorney is going to be the most expensive person out of the whole structure. We go to them for interpretation of the tax code and how to apply it in a situation. So that's everybody. Everyone below that line tends to be more proactive and very strategic about how they go about their job. Hey, Mr. Business Owner, if you're already doing this and this, then if you do this one more thing, you now qualify for this tax break or this tax credit or this exemption, and that's going to change your taxable consequence by this many dollars. So it's much more of a strategic, how can we qualify for what the wealthy are already doing versus the tactical, reactive kind of stuff that everyone above that line is doing. So no one's got a better job than another, but what you really want in your company is a tactical person and a strategic person, a reactive person and a proactive person, and that's where you're going to find the biggest needle moving and how much you're paying in your tax.
Gotcha. So so they already have end of the year tax planning. What goes on with that?
End of the year tax planning is something that's super common in the industry. I hear it all the time, and it's one of those oxymorons like jumbo shrimp, military intelligence. I think with these SBA loans that came out, they just came out with the interim final rule. And if it's an interim rule, it's to get you to the next one. If it's a final, it's supposed to be done, but now we have an interim final. So end of the year tax planning is like that. There is no planning if you're already at the end of the year. Planning by definition is something that's done in advance of the activity. And so if you're at the end of the year, there's no time to implement anything. All you're really doing for end of the year tax planning is a projection of that last tax payment of what you're really going to owe. But true tax planning is done all year long, and in an effort to try to reduce how much you pay in tax by implementation. And sometimes implementation can take needs a lot more time than just starting something in December.
Gotcha. So what is tax planning the way that your team approaches it?
Again, it's more this proactive versus the reactive strategy. So we start with what's someone already doing, who's on their tax and accounting team, and we review their last tax return and their activities, and start to identify things that are missing that they could take. What are they already taking advantage of? Some of the common ones are like maybe they've already employed some family members, maybe they're taking a home office deduction, or maybe they're already doing the mortgage interest deduction. So all those super common ones, we take those off the table because they already know about them, they're already doing them. But we start to look for items that are missing in that. And as a proactive strategy, can you do this? Can you do this? Can you do this other thing? And that's really where you're going to start to see the needle move. And then how can we implement those things in a super simple way into the day-to-day life? The last thing we want to do is hijack the business owner from making money for his business to try to make him a tax expert. So we have our own app that we download to clients to help them in day-to-day stuff. It can capture all the receipts. It captures all your mileage. It uploads to the cloud. Super simple thing, but it just takes so much of the burden off of the owner. If you can capture the tax strategy or the expense in the moment, and you don't have to carry around receipts and all this other stuff to do something later, it's just much more simple to implement for sure.
Absolutely. So with that in mind, can you give me some examples of tax planning in action?
Yeah, let me show you one. I think everyone's probably heard of the home office deduction, which is not a horrible deduction all by itself, but there's something that a lot of people miss is sometimes the home office can have a recapture on it that might make sense or might catch you by surprise. So oftentimes if you've got a home office and then 5 years later you sell your house, that money has to be given back on what they call a recapture tax. And there's a way to get around that, but you got to go file some extra documents to get there. So one is, if you're going to take it, make sure you have the strategy to make sure that it doesn't get recaptured later. Number two is sometimes the home conference room rules make a whole lot more sense than the home office. So think of it this way, Dan, you've got your social security number personally. Your business has an EIN number. And those are two separate things, right? According to the IRS, you are not the company is not you. Also, in the code, the attorneys will tell you if you're an LLC, if you're an S Corp, if you're a C Corp, you should be having meetings, amendments, resolutions, operating agreement, articles of incorporation, organization, all that stuff has to be done. So if you're having meetings and you're documenting those meetings, it's a law that you do those. So where you do those, can be very advantageous. Also, right around the same time Airbnb started getting really big, the IRS had to decide when is renting your house out to someone, when is it a hobby versus a business? And so they came out with this over a decade ago. It's been around a long time, but most people are not using this the way we're gonna talk about it. So this is publication 527. When I tell people in the IRS code there's tax-free income, the IRS literally says don't disclose this income. They usually find it hard to believe. So I won't bore you with the whole thing, but this is the IRS code. And it's talking about when is it a residential property, when is it a rental property, when is it a vacation home, and that kind of stuff. If we bounce down to page, let's see, it's 14, 17. Here we go, 17. Let me blow this up for you. So here it says, can you see this okay?
Yeah.
So there's a special rule if you use your dwelling unit as a home and you rented it for less than 15 days during the year. So dwelling unit is defined for us right here. The dwelling unit includes a house, an apartment, a condominium, a mobile home, a boat, a vacation home, or any similar property. So long as you got these three things, you got to have a sleeping space, a toilet, and cooking facilities. So most of the places we live in have those three things for sure. My boat is a 28-foot boat. It's got sleeping space. It had a toilet, but didn't have any cooking facilities. So all we had to do to get my boat to qualify was to go buy one of those $200 barbecuers and mount it to the rail. Now I've got cooking facilities on my boat, and it now qualifies. So any of these, and an ownership is doesn't matter, right? An apartment is listed in here. So it doesn't matter if you rent your house or if you own your house, you can take advantage of this. So that's the property. Now let's see what the tax break is. I think that's 2 more pages. Here it is. If you use your dwelling unit as a home and you rent it less than 15 days during the year, its primary function is not considered to be a rental. It should not be reported on Schedule E, your 1040. Schedule E is where all real estate shows up on your 1040 form. And you are not required to report the income or the expenses from this activity. So three times in one paragraph, the IRS says, we don't want to know about it. If it's under 15 days, it's a hobby, and that's just tax-free income. So now let's put all of these together. Let's stack this up. It's a rule and a law that as an entity, you have to have meetings. Where you have those meetings is entirely up to you. So why not have them in your own home? So what's reasonable is we would figure out what's the total square footage of your home, not like the home office. A home office is only a percentage of the entire home, right? If I have 1,000 square foot house, I have a 100 square foot office, that's 10%. This is the whole house. So if my whole house is 1,000 square feet and I call the local hotel and say, how much is a 1,000 square foot conference room for me to have a business meeting? And they say $1,000 a day times 14 days, you personally, the business owner, can rent with your social security number, can rent to your EIN, your business number. And because it's 2 separate tax ID numbers, you're not violating the self-rental rules under the IRS code. And it's completely deductible for the business. The income comes over to you personally, and it's completely tax exempt. So if it was $1,000 a day and you did this 12 times a year, you could do 14. But if you did it once a month, that'd be $12,000 a year, completely tax-free. That's kind of a big deal. I did this for someone in Montana, and in Montana, he had kind of like a starter home. It was maybe 1,200 square feet, maybe 1,300 square feet, and it was like $800 a day. So 800 times 800 times 14 was about $11,000. I did this for kind of a higher end client in Manhattan, like downtown Manhattan, and he had about a 4,300 square foot house. Maybe it was 4,500. But what that was $15,400 a day, which was insane.
Absolutely.
Yeah, 15,000. I'm sorry, my phone was ringing through. I thought I shut that off. 15,400 a day times 14 days. That's like $211,000 a year. That is for him. Same strategy in both cases. For one person, it means $11,000 of tax-free income. For someone else, it's a couple $100,000. So we have to find out what's reasonable and customary for the area and for the size of your house. And then there's a whole process around how to document this properly. There's 8 steps to do it. It's very easy, very inexpensive to do. But this is, if you're already, remember the most powerful strategy is if you're already doing 1 or 2 things and you just add 1 more thing to it, that's what's really going to move the needle for somebody. Does that make sense?
Oh, absolutely. It sounds fantastic. So if someone who wants to take advantage of your team to help them to change do they need to change their CPAs or tax preparer to do this?
Yeah, no, that's not required at all. It's probably one of the biggest misconceptions is the tax planning rarely is ever done by the CPA. The CPA is usually about accounting. They're not usually tax planning at all. the people that are super, super good at taxes usually aren't good at accounting, and people that are good at accounting usually aren't good at taxes. Those are really two separate things, and they get blended so often. So we kind of take the Warren Buffett approach. When Warren goes into a company, he wants all of the senior management to sign employment agreements and stick around. And so it's the same thing. We can do the tax plan based on what they're currently doing, share that with the business owner, and they can continue to use their accountant and their CPA and their tax preparer the same, because I don't want to necessarily do that work unless they absolutely need to. Sometimes business owners realize that they've outgrown their team and they need someone else, and we can fill in with our team if you need to. But the tax plan really is designed to stand on its own, and I'll show you here in just a little bit an example of what that looks like and why it can be a completely separate service.
Okay. And so what is the process for understanding your services and pricing?
Well, it's just, it's super simple. Like below this video, there'll be a link to our calendar. You can just schedule yourself an appointment. We can discuss what your situation is. And then from there, we can discuss if you just need some generic tax plans that will fit your price point and your revenue levels and complexity. If you're more of a do-it-yourselfer, those are perfect for that type of business owner. If you want a custom written tax plan, it's just a little bit different process where we analyze your tax returns, and we'll come to the table with very specific strategies that all apply to you. We'll also attach very specific savings numbers to every strategy. And so you'll start to see that, oh, wow, if I paid, I'm just going to make up numbers. If I paid $2,500 for the plan and I've saved $7,500, like that's a no-brainer. And that's just year one, right? You're going to get those tax savings over and over and over again. I think I've got, yeah, here's some tax savings examples of what we've been able to do for clients just in their first year tax savings. Auto glass company, we saved them $35,000 in their first year. A diesel shop was $112,000. This was someone who was like, I've got my relationship with my CPA for 20 years. I'm going to keep him. And I'm like, that's fine. Totally keep him. We gave him the tax plan. He got mad and he went shopping for a CPA right away. He's like, I could have completely funded my retirement by not overpaying the IRS $112,000 a year. But as you can see, we can go from industry to industry, and come on, the tax code's 77,000 pages, right? So there isn't going to be a case where someone is doing everything they can possibly do. It just doesn't happen because there's so many opportunities in the tax code for the wealthy people.
Wow, that's amazing.
And then let me show you a tax plan real quick as well. This is a resource guide. I'll be happy to send this to anyone who wants this. This just breaks down all the tax tables if you're single, if you're married, how much you can put into IRAs, 401ks, what the vehicle rates are. It's just all of the really quick, in 2 pages, all the tax numbers that we need to know about, what the standard deductions are for everybody, what's the difference between capital gains and ordinary income. So that's a freebie we can give out for sure. And then as an example, let me just show you what a plan looks like. So in this case, we've promised this person here, we're going to save them at least $15,000 in tax savings, not tax deductions, right? If they're in a 30% bracket, we're probably going to have to save them $45,000 of deductions to get $15,000 in cash. So then what we actually found was $33,717. And over the next 3 years, that's $100,000. So here's the strategy, explained super simple. Maybe they're already doing the home office, but we want to make sure they're not doing it incorrectly. So we went ahead and included this one, but we didn't put a number next to it because they probably already knew about it, already talked about it or something. But here's one. Here's that 14-day one. This is going to save this person $4,900. Here's some travel expenses that we've identified in their habits. Saves them another $1,050. So it's really easy to start to identify what the strategy is. And then back here, let me bounce down to maybe page 19. We'll have a full page summary that goes into much more detail and explains every single piece of it. And then down here at the bottom, if I can zoom in a little bit, there is some IRS source code. So any kind of revenue rulings, treasury rulings, court cases, we've identified all of those. And that's why you don't need to change the CPA. We can just do the tax plan and say, this one applies to you. Here's the code in case your CPA is not aware of it and needs to go look stuff up. And certainly if you need us to become your tax preparer, we can do that, but that's not required for sure. But that way you literally have this as a living document to be able to go implement throughout the year. Like we were talking about earlier, it's not just an end of the year thing.
That's amazing. So with that in mind, so how can my clients follow up with you and your team with more questions?
Yeah, right below this video should be linked directly to my calendar. And if for any reason if something's urgent and the link's putting out a week or two, just call the office. The phone number is there as well. There's someone that can juggle the calendar always if something's urgent for sure. But just schedule yourself an appointment and we can talk over their situation and figure out if there's something we can do for them for sure.
That's awesome. I know you're exceedingly busy all the time, so I appreciate you taking a few minutes out of your day to help me with my future clients.
Oh, no worries. I enjoy it. Thanks, Dan. We'll talk soon.
Bye-bye.